Good morning. All eyes today will be focused on P. Chidambaram's maiden vote on account speech. How will that impact your portfolio and change life for you? We'll capture that for you with a brilliant lineup.
Oh yes, and a stupendous lineup coming up on ET now to analyze bit by bit what the markets want and of course what you could do with your investment and trading portfolios. So here we go. Shankar Sharma, Ramesh Damani. We'll also get your views from Ramdev Agarwal, Robert Parker, Jyoti Vardhan Jaipuria, Nilesh Shah, Atul Suri, Arvind Sanga, Aditya Narayan from Citi and Neelkant Mishra as well. So a slew of experts joining in to tell you what the market wants from Chidambaram today. Meantime, Bimal Jalan, Subir Gokarn, Kanhaiya, Jahangir Aziz, KK Mistry, Swaminathan Aiyar, Punita Kumar Sinha, Arnab Das, Mukesh Putani and C. Jairam will all join in to tell us what's the verdict on the economy then. And as always, you will see our faces. Ashwini Gujral, Mitesh Thakkar and Sandeep Wagle join in to analyze the technicals of the market. But Nikunj, the key point that everyone is pondering upon is, will it be a make or break situation for the market? Because next 3 months, we'll have another budget.
Aisha, even though all eyes would be focused on P. Chidambaram's maiden vote on account speech, thankfully, this time around from today's event, market expectations are precious little. So at 3:30, when we will look back, today's vote on account speech will turn out more like a no event. The big number from any budgetary exercise is the fiscal deficit number, which markets know will be under check and will certainly be under 4.8%. Whatever forward-looking assumptions P. Chidambaram will table in today, markets will take that with a pinch of salt, because in May we will get a new government in place and the credibility of those numbers could be a big question mark. So we could see some tinkering in service tax, maybe minor move when it comes to excise duty, custom duty on gold, but that's about it. Today's vote on account is not going to be a market moving event. In fact, when markets will start, we really will have to focus on global cues, flows and other important news development. Ashwini Gujral is also ready. Let's get a technical sense from him on how should one trade today and which way things are really stacked up. Ashwini, good morning and thank you for joining us. Vote on account, Ashwini, is an important event, but from a market perspective, it well could be a no event.
Good morning, Nikunj. I think vote on account should be looked at as his report card more than a futuristic statement. What needs to be seen is how well expenses were managed, how well tax revenues were generated, etc. So basically the fisc, instead of looking for major policy changes, but even with a general budget, the impact it generally has on the market is that of inducing some sort of volatility. The previous trend generally tends to continue even in the case of a normal budget post the couple of days of volatility that happens. So even here, I think the market is clearly in a downtrend and what we are going through is some sort of a reaction. And once this is over, I think the market should continue with its previous trend, which was on the downside. So I think maximum 61.30, 61.50 should be the extent of this sort of a pullback rally, and post that we should continue on the downside. In terms of investors, they need to be with the export sectors, auto, ancillary, tech, pharma, etc., which has worked for them. I don't think playing the volatility in the domestic sectors for a couple of days is really a worthwhile trade.
Ashwini, what is it that you would tell traders who are wanting to trade on the Nifty ahead of the event, given that Friday we saw a strong comeback for the markets and we did bounce back all the way to 60.50?
Basically, we are in a 200-point range, 59.50 downside, 61.50 upside. So if you want to play the Nifty, maybe playing it through options, selling the 61.50 call and 59.50 put is a good idea, but to play it with futures and play it in a very directional manner is a little difficult. One way to do it is that if we get closer to 61.30, 61.50, you could try to take short positions with a stop around 6200, because rallies are unlikely to sustain above those levels.
Okay, so vote on account, of course, is the big event, but the trend you need to monitor is the global setup. Last Friday, US markets had a decent close. Thankfully for us, Asian markets are also off to a good start. And SGX is telling us that we could start with a mild gap up. So more than anything else, at least For the first 1 hour of trade, it's all about global cues and global adjustment, and thankfully for us, we've woken up to a good set of global cues, and there is definitely a degree of advantage bull, so to speak, for the first 30 minutes of trade. But even though market expectations from Chidambaram's maiden vote on account speech are precious little, what exactly are experts pricing in, and what are top strategists advising their clients ahead of today's event? To discuss that, I am now joined by two very special guests, Jyotivardhan Jaipuria, Head of Research with BofA ML, that is Bank of America Merrill Lynch, and Neelkant Mishra, Head of Research with Credit Suisse. Gentlemen, good morning and thank you for joining us. Jyoti, let me kickstart the discussion with you. The big event today is vote on account. So what exactly are you expecting from today's vote on account? Will it be just a non-event, or we could see few numbers and we could see Chidambaram really pulling a rabbit out of the hat?
So, it's a vote on account, it's not a budget. So I guess from the market point of view, what one would be looking at is the fiscal deficit which the finance minister achieves. My guess is he'll meet his target of 4.8% of GDP. Because two things have helped. One is there's been some progress on the disinvestment. The other is the spectrum auctions are going quite well, and he'll probably get more than what was estimated in the budget from the spectrum auctions. The other thing I guess people will be looking at is how he's achieved the 4.8, how much has been the cut in expenditure, how much was the amount which is deferred to next year.
Neelkant, hi, morning. I want to get you in as well on the discussion. What do you think markets should expect from the vote on account today? A spin on numbers or a somber reading to the economy?
No, I think there is very little that can move the market that can be said in the vote on account. I mean, it's more a reading of what happened last year, whether the government was able to meet the fiscal deficit target, which we all know now is going to be met. The opposition could raise some questions on how this target has been met by cancelling planned expenditure, by postponing some of the subsidies. But on the whole, the targets have been met. I think the telecom auctions will give a lot of confidence boost to the government. As per the expectations on duty revisions, etc., I don't think there will be anything very meaningful. For those that are more academically interested, because some things go into the record books, this would still be of interest, and that's why I think so. It's being observed so carefully, but I don't expect it to really move the market.
Jyoti, now the finance minister has again and again indicated that he will curtail the fiscal deficit to under 4.8%. He knows to draw the red line. Now, do you think maintaining fiscal deficit could also come at a huge cost to the economy? Because the simple solution here is that he's decided to go easy on planned expenditure, which in a sense will really make life slightly difficult for the new government.
Yes, that's why, like I said, one is my view is that he'll achieve the 4.8, and then we have to see how much is the amount is deferring to next year. Typically most finance ministers do keep deferring some amounts to the next year. So to that extent, as long as the amount is not very substantial, it will be taken positively.
Jyoti, there is buzz that Mr. Chidambaram might announce some tax measures. Of course, he can't touch direct taxes, but do you expect tinkering on indirect taxes?
See, he's said publicly that there could be some changes in the indirect tax. So maybe he'll announce something. See, they would on the margin probably help the economy. I guess what he's trying to do is see if he can cut some taxes in a bit to revive growth, because growth has been a concern. I don't think it's going to be so substantial that markets would really bother about it a lot.
Jyoti, it's rare, but we've got a consensus going among strategists now, because both you and Neelkant are of the view that today's vote on account event is of no relevance or little relevance for the market. So Neelkant, this one is coming your way. No matter what is announced today, the markets are only keeping an eye on the upcoming general elections later this year. So where do you think markets would move, let's say from here till May? Do you expect markets to be really volatile in the run-up to the elections?
That is true. There are a lot of people who are, most investors seem to be least interested in earnings growth, the results, momentum. I think there's a lot of interest in meeting psephologists, political experts, even politicians, trying to understand what the policies of various governments can be, how they foresee their own chances. So there is a lot of focus on what ends up happening in the month of May. You're right. I don't think it should, but that's the way the market is.
Okay, Jyoti, Neelkant, stay with us, gentlemen. I'm going to come right back to you. But it's also important to analyze whether or not it's turned out to be a non-event or a big event. What does history tell us about the market moves? Gargi is here to draw out the analysis. Gargi?
Well, Aisha, it's interesting if you look at what happened on the last two vote on accounts, that's 2004 and 5 and 2009-10. So both these days we had a significant decline on the markets. Look at the 2004 and 5 data, shows you that 2.5% decline is what we saw on the day of the vote on account. For 2009 and 10, over 3% decline, that's 3.4% to be precise, is the decline that we saw on the vote on account day in 2009-10. For 2004 and 5, just putting in some more data points there, a day before the budget was announced, it was down 1.8%, but the markets gained almost 3% the next day of the budget. For 2009-10, the trend is almost reversed. The day before the budget announcement, 1.9% increase we saw, but post the announcement, probably there was some disappointment, 2.7% decline that we saw in the markets. So it's an important day to watch for if we are really going to, it's going to be the third year, if at all, there is going to be a decline in the markets. But the day before, that's on Friday, we closed with gains of almost 0.8%.
All right, Gargi, thanks a lot for that. Let's take our first break on the show. Neelkant Mishra and Jyotivardhan Jaipuri are still with us, but when we come back, Arvind Sanger will join us live from New York, and good old Ramesh Dhimani with his understanding of what should one expect from today's event.
Meanwhile, what does the market expect from the vote on account 2014? Let's hear out some top voices.
If the UPA comes to power, and the markets will, in my view, definitely fall. I mean, that much is a pretty, done deal, right? That is a buying opportunity. So I'll definitely buy. But if the NDA comes to power, I don't think I'm going out selling, because there'll be far better things at that point in the world to sell. So let's just say that India, I would be a buyer on dips, but I'm not a short on India as much as I'm a short on the rest of the emerging market world. Not just yet anyway.
The markets today have priced in a lot of uncertainty related to Fed tapering. It has also priced in uncertainty related to election, and which is why hopefully markets will remain range bound around current levels. There is definitely hope, and the sentiments have revived, and hopefully the numbers will start improving as we move forward.
In April to December, the government spending has grown at 17.5%. That's quite high. That needs to be addressed systematically, not just by deferring expenditure, which is what we'll see in the next 3 months. I would agree with the consensus that there's not going to be much happening in the budget which moves the markets or the macros. The tax environment for multinationals, as well as the whole approval process and other issues that the corporate sector in India is facing, that needs to be addressed. Inflation, which is the most important macro stability indicator, that is still not in control, and I guess that's what probably even the voters will be still concerned about.